Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So just imagine you got 10,000 US dollars right now, and what you want to do is start investing in the stock market. Specifically, you want to buy companies that pay dividends. I've got two-part videos. The first part is focusing on companies that are dividend growers, so the dividend aristocrats, dividend kings, companies that increase the dividend every single year, and they have been increasing this dividend for maybe 5 years, 10 years, 20 years, 30 years, 60 years, whatever. And then the second video, we want to focus on the yield, meaning we want to look at companies that you could potentially invest in that have a higher yield. So the second one focuses more on the income. The first one focuses on more of the dividend growing side of things. So for me, I have a bit of a mixture, but normally majority of the companies that I own right now are dividend growers. I do have some companies that have a higher yield, but they also they pay higher dividend, but at the same time they're growing that dividend. But there are a couple of companies, 2 or 3 companies that I have in this portfolio that are just dividend paying companies that have a higher yield. So I'm going to give you both sides of it. So today's video, we will focus on dividend growing companies. So I've got 10 different companies. We will invest 10,000 US dollars. I'll give you the companies. I'll give you the breakdown. I'll give you how much money you will make. I'll give you how much it will cost you and all of that information. All I ask in return is for you to give the video a like, subscribe to the channel, okay? Open that notification bell so you don't miss anything that we're posting. As well as that, the platform I'm using, a lot of you have been asking me recently, what is this platform? This is Trading 212, and Trading 212 is, I genuinely believe, by far one of the easiest and best platforms to use, especially if you live in the UK or in European countries. You can get access to this. You can get an ISA account, which means basically anything you buy and sell, the government will not touch it. Your taxman will not take anything from you. Okay, and this is what I've been using for the last almost 4 years now. So yeah, if you're interested to sign up, there's a link in the description where you get a free basically share every time you sign up. And of course, I do get one as well. So that's that out of the way. As well as, of course, you join us on Patreon account if you can. You've got a lot of information, a lot of things in here. You can join us on the Discord. You can basically get your hands on any of these things, Sharia compliant, invest in ebook, as well as the different trackers and so on. Okay, right. So what I want to talk about, the first part, is why dividends are important. Okay, and this is the reason why I absolutely love dividends. For me, it's all about that income, not the income right now, but then income, InshaAllah, in the future. The right now income is perfect. I can reinvest that. But for me, I'm thinking about maybe 10-15 years down the line when I've actually retired and I want to chill and do absolutely nothing. I would want this income to actually take care of my expenses. InshaAllah, that's the plan. It might work, it might not work. I might have to work for a little bit and maybe add to it, supplement it, whatever it is I need to do. But InshaAllah, that's the goal. So what you see here is the S&P 500 annual returns, okay, and volatility by dividend policy. Now, this is from 1973 to 2022. So, dividend growers and initiatives basically are the companies that are growing their dividend every single year. The returns for these companies, okay, in that period of time was 10%, just over 10%. And they have a very, very low beta, means they're not very volatile. The dividend payers, the ones that just pay the dividends, okay, so they don't really basically increase by per se, okay, they got about 9%, which is again solid, and they're slightly had a higher beta. No change in dividend policy, meaning they have 2% and they don't change. It doesn't go up, down, whatever, it stays the same. Okay, that was about 6.6%, and that has a beta above 1. Above 1 means basically a little bit volatile. Dividend cutters and eliminators, okay, had a negative return in that period of time, because probably no one wants to invest in these companies, and they have a very higher beta because of people are selling and buying it. Non-paying dividends, okay, have returned at about 4% in that period of time. So it's not just the 1 year. You might have seen Tesla's, crazy companies going to the moon in the last whatever months. Okay, we're talking about since 1973. Okay, equal weighted and S&P 500 index has actually returned a decent 8% overall. So if you invested in the overall index for example, you will have got your 8% return, which is basically what we always say, that you get that 8% to 10% every single year, and the beta is just 1, which is basically the market, right? So that's the dividend growers. As you can see here, for me, this is why I love dividend growers, because of the total returns that you get. You get that price appreciation, they increase that dividend. Okay, now let's have a look one more thing. So in the last 30 years, the US stock market 30-year average return for annualized return, for including dividends, so this is including dividends, was about 10% in the last 30 years. If you look at the inflation adjusted, that's about 7%, so that's not bad at all. Now, no dividends, companies that don't pay dividends in the last 30 years, they've returned about 7.8%, and inflation adjusted is about 5%. So as you can see here, dividend paying companies have actually beaten the market, have beaten basically companies that don't pay in the last 30 years. If we look at in the last 20 years, more or less the same. If we look at the last 10 years, 12% return, inflation adjusted about 9%, no dividend companies about return 10%, which is good. Okay, I'm not saying don't buy Teslas, whatever, but I'm just giving you the information here. So as you can see, this is one of the reasons I genuinely like dividend paying companies, because I can get that money as well as I can focus on, you know, just that total return rather than just focusing on the company, the price appreciation or whatever the capital gains, if you like. Now what I'm going to do is I'm going to give you a quick information on the 10 companies, and then we will look at the dividend. We will look at the £10,000 or dollars that we're going to invest and how much we will get for each one of these companies and shares and the total returns and all of that is the information that you need. And then we will look at whether they're halal companies and so on. Of course, they're all halal companies, but I will show you the halal screen as well from Zoya if you like. Okay, so the first one is Home Depot. We talk about this company a lot. Right now, you can pause the video at the end, but the sections that I'm going to focus on is this section here. So the yellow part, okay, the 5-year growth rate and the safety. Reason why? Because for me to know this company is growing its dividend, I want to see what they've done in the last 5 years. So I want to see basically the CAGR for that bit part. So the 5-year growth rate for this company is 16%, and the safety is 87%. So no one is worried about this company cutting the dividends anytime soon. They do have quite a bit of free cash flow of $17.7 billion right now. But they are really expensive right now, 32% up, basically downside from where we are now. Next one is Broadcom. Is another great company that I own in this portfolio. Again, I promise you, I did not pick these companies because I own them. Is because based on the research that I've done, they came top. Okay, so the screener that I used. So 19%. Okay, so this is 19% in the last 5 years. And the safety of 67%. 61 and above is safe. They also have $17.6 billion right now in the bank that they can use. They can use this to pay off the debt. They can reinvest in the business. They can actually buy back their own shares. They can pay you dividends, and they can also acquire other business. So these are the 5 different things they can do with that money. Total return in the last 10 years, you're looking at 37%, which is absolutely huge. Morningstar is saying is right now about 15% premium. $970 per share is where the price should be. The next one is Intuit, another company that I've actually recently added to the portfolio. It has a wide economic moat as well. It has a 15% in terms of the last 5 years, 98% total safety, and free cash flow about over $4 billion, which is quite nice. It had a massive return of 24% in the last 10 years. That includes the dividends as well as price appreciation. Okay. And the Morningstar is saying 25% of premium right now. 500 is where they think the price should be. The next company we look at is Accenture, which is another company I really like, very similar to this one here, but they are both in the software side of things. They're consultant. Well, this one is anyway. This one to do more taxes, but this one is consultant side of things. Right now, 11% in the last 5 years. So they've been growing that dividend by 11%. Safety 92%. Cash right now $9 billion. And about 17% total return in the last 10 years, 29% premium right now. Again, another one that's really expensive. This kind of shows you, like, I'm not saying go away buy these companies, by the way. Do your research first of all. And if we get a correction 20% or down is correction. So that can easily happen. Anything can happen in this market. If we get a correction in 2024, I'm not saying it's going to happen. I don't speculate about the markets, doom and gloom and stuff. But I'm just saying, generally, if it happens, basically put these companies on your watch list and buy them when you think it's the right time, if you think it's actually the right company for your portfolio. Next one is AbbVie, a giant pharmaceutical company, 17% in the last 5 years, 70% safety. Premium right now, about 23%. MasterCard is another huge company. Right now, about 18% in the last 5 years. So they've been growing that dividend about 18% in the last 5 years, which is absolutely amazing. Safety, 99%. They have a lot of money in the bank. Also, AbbVie, by the way, I was quite shocked. They've got like 25 billion US dollars. Okay, but they are a huge company, 274 billion market cap. So yeah, about $10 billion in terms of free cash flow right now. Total return in the last 10 years, about 18%. Fairly valued right now, $421 per share is where this thing. So Visa, of course, the next one has to be Visa. Visa's returned about 16% recently. Sorry, 5-year growth rate of 16%, 99% safety. Almost to $20 billion of free cash flow right now, 17% total return in the last 10 years, fairly valued, $260 per share is where they think the price should be. The next one is automatic data processing, and then again 14% in the last 5 years in terms of growth-wise side of things. Safety, 97%, which is very, very safe, fairly valued right now, $240 per share. Next one is EOG Resources, so again, oil company. And they've only been paying this for 5 years, but 36% growth in that last 5 years, which is absolutely huge. And 82% of basically safety right now, $8 billion of free cash flow right now, fairly valued, $132 per share is where they think the price should be. And finally, Texas Instruments, another company, technology company, 17% in the last 10 years, 90% in terms of safety. Free cash flow, $1.6 billion, fairly valued, $155 per share. So that's the 10 companies I wanted you to have a look. So you can pause the video now if you want to see more details. But the ones that I wanted to focus in is the yellow sections, and of course, basically where we think they are right now. Now, the next part is the fun part. So this is the bit that I want to share with you guys. So let me try to fit it into the one screen. Okay, so you can see. So as you can see here, we've got all the companies here. So we've got the current price, we've got the shares. So how much? So we divided the 10,000, okay, into basically 10 different companies. So about £1,000 per company. Okay, $1,000 US per company. So you get about 3 shares for Home Depot. Annual dividend, okay, is $8.04. You will get about $25 for investing in this company. For the next one, Broadcom, you get about 21, because you can only get 1 share for this because we're expensive right now. This one you can get 5.8 because the yield is very, very low, as well as of course the dividend payout. Okay, so you get about $5. Let's call it $6. The next one you got $15. The AbbVie you get $40 if you own 6.6 shares. That's really interesting because the yields, of course, is way higher because the dividend yields right now 3.6 is, whereas these guys are giving you 1%. And again, I'm not focused on the yield yet. Okay, so that's the next video. The next video will be, we'll focus on the yield, and hopefully the income will be a lot more than this. MasterCard, $5, $8 for Visa, $22 for ADP, EOG, $29, and Texas Instruments, decent $31. In total, if you invested just over £10,000 into these 10 companies, you will get $200 basically per month, per year, sorry. Dividend yield for entire portfolio will be decent 2%. And 2% is actually good. 2% with this type of companies, with your dividend yield on cost will be absolutely higher in about 10-15 years down the line. The latest increase on average is about 12%, which is really good. So you can expect a 12% growth on your money every single year. Can you imagine that? When was the last time you got 12% increase from your job? But this portfolio will do that for you. Okay, and the 5-year growth rate for the 5-year growth rate is about 18%. So in 5 years, you're expecting about 18% growth. Again, when was the last time you've been working in for the last 5 years? Have you got 8%, 18% growth increase in your salary? Absolutely no. I don't think that is the case. Okay, for many of us anyway. So there you have it. That's the basically 10 companies I want to share with you guys. Like I said, the yield is not the important part. These companies, I've selected them based on the growth side of it. So how long, how much in terms of the 5-year growth. Okay, as you can see, they're all double digits. That's the reason why I selected, not because of the dividend yield. Again, even then, some of them have 4%, some of them got 3%, some of them got 2%, some are less than 1%. Okay, so you got that mixture, and this, I guarantee you, company like Broadcom, for example, Intuit, Accenture, they are basically growing their revenue, top line, bottom line, everything, and the company's actually price appreciation is also growing. So that total return in the end will be absolutely amazing. So this is why I love dividend growth, basically dividend growth companies, because of the two things. Now quickly show you, you can pause the video and have a look at it. That's the Sharia compliance side of things. There's nothing that I'm worried about here in terms of majority of them are less than 25% for the interest bearing debt and interest bearing securities. From halal side of things, in terms of business, is also absolutely fine. So what I want to do is, the next video, inshallah, I will show you another 10 companies, exactly the same format, but this time we're going to focus on the yield side of it rather than just focusing on the dividend. Basically, we're going to focus on more on the yield rather than the growing side of things. If you're enjoying this type of content, please do me a favor, like this video. It takes a lot of time to put these videos together. So just press that button, subscribe to the channel, and also make sure that you join us on the Patreon if you can, because you get access to a lot of these things. Now finally, to show you my own portfolio, right now my dividend yield is 2.26%, and this is after I've taken into consideration the fact that I have to pay 15% for all the US companies. Okay, so I'm getting about over £2,000 yearly, and that gives me about £173 every, basically per calendar month. Okay, just on average. And as you can see here, and I'm going to share a lot of this information in the coming videos when I do portfolio update for the month of December. As you can see, Rio Tinto basically is one of my top holdings, and it's 170 I'm getting from them, 168 from public storage, 3M 164, so on, so on, so on. You can pause the video and if you want to have a look at that. So that's just to kind of share my side of the portfolio. Have a wonderful day, and I hope you enjoy this type of content. Please, if you are, just give the videos a like, and appreciate that so much. Have a wonderful day. Assalamu Alaikum.